So we've been, for altcoins, generally speaking, of course, everything's a little different. We've been in about an 872-day bear market. Okay. So what signifies the technical end of this bear market? The technical end of this bear market would be a clean break of this accumulation channel that we've been in for the past 469 days. And remember, if you've been in any channel, in any space of accumulation, what you want is not just a break, but a retest. Hello everyone, my name is Dean, and let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 30th, 2023. And this is going to be the end of the altcoin bear market. All right, I'm going to show you what on the charts will signify the technical end of the altcoin bear market. But first, let's talk about Bitcoin, okay? Where are we at? I said with a high degree of probability that this week we would get a massive breakout to our $32,000 target. And I said at the very least we would hit that $32,000 target. It's Saturday and we still haven't hit it. But here's why I'm still not convinced that we're not going to hit it by the end of the week. We may get that rare weekend pump. All right, so let's look at Bitcoin and see what's going on. Guys, if this interests you, watch until the very end. I promise you, you will not be disappointed. All right, Bitcoin on the daily time frame, we can see very clearly what's been going on here, okay? So look at this support first. All right, let's get our pen out. And this line, this trend line that I've got up here is showing us exactly what's going on, okay? So for about 50 days, approximately 50 days, this trend line served as a support. We lost that support, okay? Now, after about a 50-day accumulation, we came back up, and naturally, that previous support is now fresh, new resistance. What we're trying to do, right, with this breakout, and what we should do very soon, is break this 100-day resistance. It's a 100-day resistance because you add the 50 days of support. Now that turns into resistance, and obviously 50 days of resistance for this accumulation channel. And you can measure that if you like. Take your measuring tool from the beginning to the end, and you can see it's almost exactly 100 days. 100 days of resistance looking to be broken to the upside. Okay, so you can see this trend line has been very well respected and is being very well respected in our accumulation channel. Should we break it to the upside, what are the targets? Very simply, you do pattern analysis, and at least, even if pattern analysis isn't perfect and it doesn't give you the ultimate target, it gives you a target, okay? It'll give you a target. So you can take the height of whatever the accumulation channel was, superimpose it from the purported side of breakout, which would be here, and you can see we'll make a target of around 31,000. I've been saying 32,000. I'm still I'm still a believer in 32,000 being our target, which is the top of this channel right here. You see, right? It's quite simple. And if you there's another way to look at this, guys. There's another way to look at this that doesn't involve pattern analysis. But the beauty about this manner of doing analysis, not just looking at everything one way, is that sometimes you find confluence. Confluence meaning, despite looking at the same thing in multiple ways, you get the same conclusion. So let's say we were to treat this as a large channel, okay? And in this large channel, we go down, up, okay? So remember, channels have three main features: a support, a resistance, and a midline. Let's try that again. A midline, okay? Nice. That midline is about where we're at, right? Approximately 27,000, 28,000, okay? The midline is resistance when you're below it, support when you're above it. So if this is true, then we're simply under the midline, and the target is quite simply the top of the channel. Again, you get 32,000 for any breakout to the upside there. Okay, the other thing that's important to note is, and a lot of people are going to overlook this, don't be one of those people. Once we get a breakout, okay, it's the first breakout in a long time, right? In 100 days, okay? First breakout in 100 days. Many people are going to take profit expeditiously. You're going to see a big move up and then a relatively large move down, okay? That in Elliott wave theory we call a wave 2, right? Wave 1 is the initial impulse, initial impulsive move of the breakout. Wave 2 is the retracement of that breakout. Okay, wave 2 comes between 0.5 to 0.618. So typically, you can expect that kind of reaction. Now, let's jump down into the 4-hourly time frame to see a little more carefully what this would look like. Again, if that target, let's get rid of this. If that target is 32,000, what I would do is take my Fibonacci retracement tool from the bottom of what seems to be the beginning of my impulse, right? From the midline of this channel all the way to 32, right? Which is my purported target. And I would not put it past price to even put in a 0786 move. What's that mean? Okay, we're assuming that your impulse starts here, but actually something I've learned the hard way in technical analysis is your impulse typically doesn't start until you've breached the main resistance. What's that mean? That means instead of counting your impulse here, saying this is wave 1, wave 2, wave 3, wave 4, wave 5, and then from here you can get a 618 retrace, right? I would more prudently count this as also being part and parcel of these corrective moves, meaning I would expect a 0786 retracement or a greater than 0618 retracement off of that. Plain terms in English, that basically means if we do get a breakout here, don't be surprised if we retest this 50-day resistance, or, it's a 50-day resistance as support completely. Okay, so if we completely come back on the move, that shouldn't be outside of the realm of possibility if you're being prudent. It doesn't mean it's going to happen, but I would plan for it. If you want to be prudent, plan for that. Lots of people are going to get caught by that, and I've seen it so many times. I've been caught by it so many times. So what I would do is, if we do get a breakout, whether we go to 30,000 or 32,000, I would be on guard for a retest of this 50-day resistance. We don't have to get it, because it doesn't seem, it's clean enough on this chart, but we could also get that 0618 retrace, just like I said in the beginning, and this may very well be part and parcel of the impulse, so the impulse may have already started. But I would prepare for a deeper retracement. I hope this helps people prepare, because it's all about preparation. You want to prepare for the worst case scenario, hope for the best, but do be prepared for a complete retracement on that line. And another thing that lends credence to that trade plan is this. Today's Saturday, we're going into Sunday. Typically, when we move on the weekends, we retrace the weekend moves because it's a weekend move. Unless there was a gap that we already filled, right? A previous gap that we're filling, and that move happens on the weekend. Typically, if you move on the weekend, basically that's moving when the US dollar currency index, the liquidity maker, the liquidity provider for the cryptocurrency market, isn't moving. So it's not generating liquidity, meaning all these moves are wash trades, meaning they're going to come back on themselves because they have to balance out, right? So this is why we don't typically get substantive moves on the weekend. We have in the past, okay? But it's tough to tell. Like I said, it has a lot to do with previous gaps created. That's another subject for another day. All I'm saying is If we did move on the weekend, it lends more credence to that move retracing this 50-day resistance as support, and then continuing with the impulse in earnest. Okay, so that's Bitcoin. I'm still seeing that happen sooner than later. Don't be surprised if we get a weekend move. Still looking at 32,000 for our next significant target. Now, altcoins. This is the end of the altcoin bear market. This right here, a break of 640, what is that, billion dollars. Okay, I'm looking at the total 2. For those of you who don't know, total 2 is a chart that's an aggregate of all of the, or most of, or all of the altcoins in the cryptocurrency market. So no Bitcoin, just all the other assets put together in one chart. That tells you. Doesn't necessarily mean that every altcoin follows this chart. It's just a rough estimate as to what's happening in the altcoin market, the non-Bitcoin space. So what you can see here is this. For the past 469 days, we've been in this accumulation or consolidation. Let's call it consolidation. Let's not characterize it, okay? We've been in this consolidation channel going up and down, up and down, up and down, up and down, okay? Now, the bear market. First, we have to define our terms. So many people are loose and free with, you know, what the bear market is, what the bull market is. They see any move to the upside, they call that a bull market. I don't know about that. A bull market to me is pure impulsive price action. From my training in Elliott wave theory, a bear market is the declension or the drawdown, the impulsive drawdown, as well as the accumulation, okay? And actually, technically, the bear market starts when you hit your initial break of structure. So all this is the bear market. So your ABC correction, which is this, right? A, B, C correction, and then the ensuing accumulation, and then that is the bull market, which is the direct result of all of that accumulation, right? So if you want to be technically accurate, the bear market is, for altcoins, has been in effect since about May of 2021. So we've been, for altcoins, generally speaking, of course, everything's a little different, we've been in about an 872-day bear market, okay? So what signifies the technical end of this bear market? The technical end of this bear market would be a clean break of this accumulation channel that we've been in for the past 469 days. And remember, if you've been in any channel, in any space of accumulation, what you want is not just a break, but a retest. Okay, so a clean break and retest would signify the technical end of the bear market, because breaking does not make a channel complete, okay? Breaking a channel, we've seen it before, you can get fake outs. You want to break and retest previous resistance as new support, okay? And just to give you guys a correlate, so everybody can kind of understand, Bitcoin has not been in a bear market, okay? Bitcoin broke its bear market some time ago. And this is actually really insightful for people who analyze these markets and want to compare Bitcoin and altcoins. Bitcoin is quite ahead of altcoins in terms of its price action, right? From a time perspective, right? The bear market for Bitcoin was this right here, right? So we're going to use exactly the same terms as we use when looking at the altcoin chart. Bear market for Bitcoin started around April of 2021, A, B, C. That's the declension or the drawdown. This is the subsequent accumulation right here, okay? And this is the break of that accumulation, and this 1, 2, 3 is the retest. The bear market for Bitcoin ended upon retesting, successfully retesting 25K previous resistance as new support, the previous resistance of the accumulation channel of the bear market. Okay, so your bear market consists of two aspects: the declension, right? So the ABC flat correction or the zigzag or whatever you want, the corrective pattern that takes you from up to down. But again, just like any price action, and this is universal, whether you're on the 1 minute time frame or the daily or the weekly time frame, you can't just change directions and go from down to up. You need to put in an accumulation. So even though the bear market declension or the drawdown ended around June of 2022, we had to then undergo an accumulation that lasted approximately, say, 200, 300 days before finally breaking that accumulation to the upside and then retesting the previous resistance of that accumulation, which is 25K, as support. I hope everybody understands, and this is not too arcane. Okay, so back to altcoins. 645 billion is what we're looking at. Basically, this resistance. And again, people are going to get really excited by what happens once this is broken. Okay, altcoins haven't moved in a long time in the aggregate, right? 469 days only for this accumulation or this consolidation, whatever you want to call it, right? People are going to want to take profit ASAP. So as soon as we hit major resistance on this chart, do expect a relatively large retracement. Also, you shouldn't expect anything less, given that we've been in this channel for 469 days. Please know and please understand that any moves breaking this channel are going to yield, by definition, a move retracing back to the top of this channel, retesting previous resistance, 469-day resistance, as new support. That, my friends, is the end, the official technical end of the altcoin bear market. Okay, and the last thing I want to show you is this. Look at this. Were you to take a Fibonacci retracement tool from the bottom of where we are now all the way to the top of my purported next major resistance level on this chart for altcoins, what do you see? You see almost perfectly to a T. You come back, or actually, you know what? I didn't pull this right. I would pull this all the way down here. Hold on. Stay with me here. Watch this. So I believe that this is the start of the impulse right there. Look at that. Almost to a T. If you go from where we started all the way to $1 trillion, look at where the 0618 lies. Okay, that's confluence. Not only in terms of pattern analysis do you have this previous resistance, needs to be flipped as new support, but also your Fibonacci retracement tool tells you if you do get a move here, the retracement back to this neckline would be right on the 0618, and that 0618 is coincident with the neckline. That tells me with a high degree of probability, this is what we should expect in altcoins, a move to $1 trillion, then back to $645 billion. Okay? Don't discount that retracement. Lots of people will get shocked, but that is normal, natural, and expected. So guys, hope that was helpful. Hope that was useful. Like, share, and subscribe if you got value, and I'll see you next time.
All is well.